am the
Yo! And welcome to this edition of the Base Batch Builders 3 series, where we are highlighting some of the builders that are submitting to Base Batches 3. Today, we are joined by Noda Protocol. So now, without any further ado, please introduce yourself and tell us what it is that you're building here on Base.
Hey everybody, I'm the CEO and one of the founders of Noda Protocol. We are building a decentralized autonomous asset management system that we like to call it the trust layer of decentralized capital markets. It's a multi-layered, multifaceted system that allows users, whether that's a person, AI, institutional, to connect to all the yield-seeking opportunities that are in the crypto space. And with that, we like to, mitigate risk, because with seeking yield, one of the biggest things is you can inherently increase your risk. So we came together and we looked at how other funds and other projects have done things, and a lot of it's great. But as I was always told by my mentors coming up, that everything can always be done better, and you can find new innovative ways to do that. And that's really what we have looked to do, is fix areas of improvement, whether that's node operating, yields, passive income, stuff like that, decentralized networks, and we kind of combined it together to create Noda Protocol. And we can go on from there deeper into it.
Yeah, I mean, that's it sounds like it's solving a real need for people. And to be honest, I think in the world of DeFi, there's several obstacles to overcome and barriers of learning. And for people that within crypto, it's like, okay, let me dive deep, let me learn about these things. But for Joe Everyman on the street who wants to get involved in crypto but doesn't really want to learn how the sausage is made, how are you simplifying the process to give knowledge / opportunities for yield earning in the simplest way?
The way I look at it as, I spent many years staring at screens trading, and I just got tired of being glued to those screens, right? You win big, you lose big. And for the everyday person, if you go look at a banking app or an investment app that you would use, say, in equity markets, it's pretty simple, right? ETFs, funds, stuff like that. It's one click, couple clicks, you set up an account and you're in. Here, it's similar, right? It's very simple to set up your crypto wallet, interact with the dApp, stuff like that. And then you just start earning your yields through our vault systems. And I look at it like a vault's a generic term being used recently. And I look at it as more of a fund, right? We call it a vault, but it's more of a fund because we have different levels of risk, conservative, all the way up to high risk vaults. And with that, in these funds, you have dynamic systems that allow things to be invested and actively traded at the same time, right? And this is that dual system that is an investment system and a trading system, where you have, say, 75% invested, 25% being traded. And we look to trade with profits, right? So we're not taking people's investments and then trading and taking that risk right away. It's more the investment then goes into the trading, and you try to increase your alpha in that way. And with people, your everyday person, they're able to just come to our app, and we're hoping with building on Base for a multitude of reasons that we can get into that Coinbase scene, that institutional sort of, the name that comes with building on Base, and that would give us the trust and have your everyday person who can invest into us, the institutions, the capital sitting on the sidelines, the other DAOs, and even agents can interact with our system fully, just like a person, and be able to get that alpha and mitigate that risk. Why would you invest into one company, right? Just like in the stock exchange, when you can invest into an ETF or a fund, the S&P 500, and you get that percentage without having that downside risk that you get by just investing into one company. And that's what we do. We're able to connect into all these protocols and be able to do the same thing, except in crypto. We have tokenization coming. We have tons of different stuff that allow us to operate basically in the same way you could in equity markets, except with more exposure, right? We can go into all these multi-chains, all these wild different yield seeking things and be able to get that and profit from that, but then also not take the risk is a big thing as well. And that's where I, like, as a trader and somebody who sat in front of these screens for a lot of years doing that, it's tough to compete with the machine. It's why you have the biggest companies in the world. They have people that are there that monitor the systems, but at the same time, the computers are executing. And there's a reason for that. And with the DAO, that's kind of what we've built. We've built that autonomous fund that can sit there and intervene when it needs to, but then also allows, the decentralized network that we're building to be able to do that. And we're able to pay our node operators with just the internal. The way we've set it up is that we can pay our node operators multitudes higher than the top systems that are out there, top decentralized networks, and still be able to not take massive management fees away from the people interacting with our app. We just from our, if we hit our conservative funding lines, off that conservative funding lines, we're able to pay everybody and not take money back from the everyday person. And that's a huge thing, right? I'm not a firm believer of charging fees over a certain hurdle. So in our vaults, we don't take fees from anybody until we prove that we're actually able to hit those yields that we've said we've been able to do. So it's a big thing. And from the funding that we're going to be going after, we'll be able to just cover the costs. I've also covered over 6 figures of development costs myself. We have a quant, high level educations, a solid team, not a big team, but a solid team. And we've put a lot into this. We're looking at how the markets are right now. And I've been in crypto for over 10 years. I was a miner. I was a founding father of a trading group. I don't want to name them, but I spent a lot of time on the computer, and I'm pretty good at it. And we want to watch the markets a little bit and see where things are going, see where they're going with the legislation that they're putting forward for, say, the yields on stablecoins, stuff like that. And then we'll be looking at starting our testnet, doing massive marketing, funding rounds, stuff like that, and pushing forward. Base batches, it'd be great to get into it, whether we get into this time or next round, but we're still going to push it forward. And we have quite a bit in the background for our marketing level of things. We've just been getting development out of the way first, and number one priority. There's no point of going all in on marketing when we don't have something people can interact with and actually genuinely use. So that makes sense. We've seen it before that some projects kind of burn through the goodwill of marketing, and then it's like, okay, so what's the projects anymore? Because at the end of the day, the crypto space, the AI space is moving at a million miles an hour. So if you're singing and dancing about it, and it's like, hey, by the way, we're coming out next year, it's like, well, people forget, right? And
yeah, it's a tough sell, but hey,
it's a hard balance.
So let me just pause you there for a moment, because there was a lot to digest, a lot of meat on the bone on that section. You mentioned about the DAO, you mentioned about the basket of goods with ETFs, etc. And that's an interesting element, because there are markets in crypto, there are products in crypto that like help you find yields, like set and forget models, which is something that is
right. They're very static.
But like just so the set and forget models, some of them are using AI agents to find better yields and whatnot. But like what I understood was, with the stock market, yes, typically you're not going to outperform the overall market. You have a basket of goods over there. Talk to me a little bit more about if I understood correctly, that you're creating a basket of goods through the DAO. How is it that you're looking to get the best yields for investors in the protocol?
So we have, say there's about 150 different projects out there that we could connect to. And within those projects, they all have different means of how they seek yield, whether that is from lending or stablecoin yields. There's a multitude of different, we even have T-bills and real world assets, stuff like that. And with that, we just basically have a system that uses what the top funds in the world would use to run what they call their black boxes. And that's where our quant came in and developed a system, a validation pipeline that validate what our internal vaults do with the risk profiles. And we also actually allow people to contribute strategies. So that's something I've always been a big fan of, that you can have people contribute the trading strategies to your vaults as well. So that once it passes our validation pipeline, we'll actually be able to fund their trading strategies. They'll earn a reward, whether that's a person, agent, AI, whatever you have going on, and you'll earn fees from there as well. And then on top of that, everybody involved in that vault will actually be able to earn from what you've contributed as well. And so in regards to how can we get more yield than just investing into that one project, it's because we'll be able to have a better, higher level system that trades dynamically, that uses like some pretty serious technologies. And it's tough to get into all of those technologies because there's about 15 different layers that would go into validating the trading strategy, to allocating that capital. You have market regime predictions, particle swarm optimizations, and an entire system that would be doing all these things in neural networks and stuff like that. So we're basically just taking what somebody like Fidelity or BlackRock would be using in their internal systems and putting that in a decentralized network, allocating that to vaults where we have our floor engine. And we would like to hit at least the bare minimum of what the projects that we're investing, this capital into, hooking into their systems, because it'd be pretty hard not to. But the biggest thing is that would be mitigating the risk. Because if you go and invest into one project and that project's giving you 5%, but they go belly up or something happens, a hack, whatever, then you don't have the coverage. You're going to take a loss, right? You invest into us. Our biggest thing is security. That's our number one thing that we'll be doing. Security, marketing, getting the vaults up, stuff like that. With that being said, even if we don't get a substantial return of what we're saying we can do, and we've done the math, we were looking at a very conservative approach and of what we're even putting out there publicly. And that's whether you're only investing in a vault, not running nodes, not doing anything else that could bring extra yields. With that being said, as long as we at least meet or exceed what the other projects are doing and mitigate the risk, you're already winning. So it's tough to beat that at the same time. To sit there and say we can get you 20-some%. I know multiple projects that are. I don't want to come and name those projects, but I know projects out there that are doing 25% returns and up to 50% returns at some of the biggest funds. That's a lot farther than 5% yields on stablecoins. You already have the issues that are possibly coming in for that being directly invested. If you want US investors as well, that's a big deal to be sitting there sending, with what's looming, to be taking in US investors. We're able to mitigate that as well, just because we're not directly investing into that. We're basically a proxy system that, interacts with it, but we should, from what I can tell, if the regulations go through, we should be safe, and we'll still be able to get the yields from that and be able to take in investors from almost any country. So it's looking good.
Right on, man. It sounds interesting. It sounds interesting. There is a lot to unpack, a lot to digest.
It's a lot.
But tell us, what traction do you have so far, and what stage of development are you with Noda?
We're in the final stages of development, so I wouldn't say we would take very much. Internal testing, we already are running. We have nodes online internally. We're running our internal testing systems. And I have, over the last year, talked with venture capitalist funds and stuff like that. But we want to be in the right place where we get the most for what we're doing, right? So if we can just spend more time, the market's a little down, we spend the next handful of months getting ourselves even further developed, see where things go, then the more funding we get, the more we'll just put right into our vaults. And it's not a substantial amount to make this protocol fully self-sufficient. And with that being said, conservatively, what I've seen other protocols and projects do, if we even got half of what those projects have got, put those into our vaults, not take anything for ourselves, run nodes, and let the system do what it was built to do. All we have to really worry about is security, and then people will be happy because they're earning, hopefully, like what I would say, potentially higher yields than directly investing into the other projects and mitigating their risks on all their returns. So it's really not too far out. It is a lot easier in crypto to have a bull market behind you when you launch a project. So if we can nail that all, then we'd be pretty lucky, but we'll see. We'll be taking funding here soon from different venture funds and pushing that forward. So it's exciting.
So question on that, and then kind of the final question. If people want to support, if you want to get in touch, how can they reach out to you? How can they get involved with Noda in any sort of investment capacity or just in a supportive capacity from here?
So we built our Discord. We just started it up. We haven't promoted anything yet. We just basically started our socials and sort of putting ourselves out there here and there. That's why I decided to come on this pod. I thought it was a good opportunity to just do a dry test run of putting ourselves out there. And you could join our Discord or any of our socials. We will announce and start pushing our socials a lot harder into the rest of this year. And then we'll launch our testnet and our node sale. And our node sale will be pretty nice because whatever requirement there is to run our nodes for staking amounts, you'll basically buy our node, get the utility NFT that comes with that, and then we'll airdrop you the full amount of tokens that are required to get the nodes. And that'd be a pretty good chunk. As long as we're successful of what we're trying to do, it's a substantial return. And that's, if you have GPUs or the requirements to do so, we don't have a ton of nodes that we need for our network to be fully optimized and running. So that, I think, would be one of the ways people can interact with what we're doing for now.
Okay, and what links, what are the social links / website for people to do more research?
You can find us at noder.xyz. Our X is Noder Protocol, and basically our link tree and everything is on there. You can just go to what we have set up so far, and that'd be the best way to stay in touch with us for our future endeavors.
Brilliant. Well, listen, I want to say a big thank you to you for your time, and thank you for sharing more about Noda, and a big thank you to everybody who tuned in today.
Sure.
We'll see you
Appreciate
on a future one. So until next time, stay safe, stay healthy.
Thank you.
But most importantly, stay based. Peace out, everyone.
I'm a baseline junkie. I'm a baseline junkie. Tell him again. I'm a baseline junkie. Tell him again. And I like